In April 2027, there's going to be some significant inheritance tax rule changes. Pensions will form part of your estate for inheritance tax purposes, and I strongly recommend that you start discussing these changes with your family, with your advisor, start looking at some financial planning strategies, because with no action, it means that there's going to be a lot of families paying a lot more inheritance tax as a result of the changes next year. So today's video is to take you through 5 financial planning tips to help you hopefully navigate those changes coming in next year. So the first one is review how and when you're going to take your pension benefits. Up to now, the standard advice, the accepted advice, is to take a retirement income from pretty much any asset apart from your pension. Pension's really been used as a trust fund that can be transferred through to future generations completely free of inheritance tax, and as a result retirees generally take an income from other assets like ISAs, investments, property, that kind of thing. So all of that is going to completely change this time next year, when pensions form part of your estate for inheritance tax purposes, and it's well worth revisiting your retirement income strategy, your income requirements, with a view to potentially starting to draw down an income and there's various ways that you can do that from your pension, perhaps take your tax-free lump sum. It all depends on your own personal circumstances, your personal income requirements, your tax situation, but it's definitely worth revisiting your retirement strategy next year. The second one is making use out of your gifting allowances. Now, gifting is a very effective and valid strategy to reduce your estate for inheritance tax purposes. That might be gifting outright, it might be gifting into a trust fund, it might be using the gifting out of surplus income allowance, it might be using your annual allowance. So there's various strategies that you can use. The most important thing really is to revisit your overall financial plan, your own priorities, to make sure that that you have enough for your retirement, with a view to potentially care costs and general retirement expenses. Also, it's really important that any gifting strategy is really well documented, so that your executors can claim the necessary allowances without too many issues when the time comes. The third tip is to review your will and your estate planning strategy. So whenever there's a huge inheritance tax change like there is next year, it's well worth reviewing your will to make sure that not only are you using up all the available allowances, but also that the will is aligned to your own financial goals and your own aims for what you want to happen to your estate when you pass away. Also, really importantly, you need to make sure that the pension nominations are aligned to any estate planning strategy. Number 4, understand the allowances, understand your inheritance tax allowances. So I'm talking the nil rate band, the main residence nil rate band. You need to be really aware of what these are, how to claim them, and importantly, what kinds of things triggers them to either disappear completely or to be tapered away. Number 5, and probably the most important one, you need to make sure that you're taking a joined up view with all of your financial planning. So I'm talking your investments, your property, your pensions, your estate planning, will, power of attorney. It all needs to make sense when taken as an overall strategy. If any particular part of that plan is going off on to one side, it could mean some unwanted consequences for your family, for your goals, and potentially some unintended tax consequences as well. So there are some 5 tips. Time is of the essence. The rules change in just over 12 months' time. We need to start having those discussions. We need to start implementing those financial planning strategies to reduce the inheritance tax, or even perhaps eliminate any inheritance tax on your estate as a result of these changes. I'm doing 3 free community events in this month. Well, I'll take you through in a lot more detail the financial planning strategies that you can get underway to reduce your inheritance tax as a result of these changes. You can ask me questions face to face, depending on your own personal circumstances. And so go on to the website, it's haroldstevens.co.uk to get information on the events and how to book. I'll take you through all of the events now, just in case you can't get on. So the first one is at the Swan in Thornbury, and that's on Tuesday the 17th of March, 10:30 a.m. to 11:30 a.m. Then we have St Peter's Church in Henleaze. That's Wednesday the 18th of March, 2:30 p.m. to 3:30 p.m. And then the final one I'm doing is at Stoke Lodge in Stoke Bishop. That's Tuesday 24th of March, 4:30 p.m. to 5:30 p.m. So you can book by telephoning 0117 3636 212 or email us at community@haroldstevens.co.uk. They do tend to sell out, so I'll definitely reserve your place as soon as possible, and we'll hope to see you there. Okay, see you at the next video. Bye.